Hi, good morning. I am Abhinav Chauhan, research analyst from the PRS team. I welcome you to this edition of the weekly market wrap-up. The week gone by was full of action. First, the Union Budget got announced on 1st of Feb, then Federal Reserve meeting, and in last the European Central Bank meeting, which got concluded on Thursday. Market edged higher and closed in green in 3 out of 5 trading sessions in this week. The Indian equity market moved all over the places during the week but ended on a positive note, with BSE Sensex and Nifty rising by 2.5% and 1.3% respectively. On 1 year basis, Nifty Sensex gave modest return where mid-cap and small-cap slid and gave negative return of 1.9% and 8.9% respectively. In current result season, the banks have declared the stellar results with further improvement in the net interest margins and asset qualities from the last quarter. Even the advances growth reported by the private banks was quite healthy, which is helping private bank to gain the market share. Along with banks, consumption related companies have reported good numbers with easing raw material inflation pressure, which helped in improving their margins. Companies in these sectors now expect better volume growth as sign of rural slowdown bottoming out is getting visible in the numbers. Now coming to the budget highlights. The Union Budget 2023-24 received a thumbs up from all. One thing that stood out clearly is focus on capital expenditure. In this budget, FM continued with her previous year's budget vision of building India for next 25 years. Her speech clearly focused on critical soft aspects such as skill building, inclusive developments, and leveraging the country's technology and knowledge prowess. There was strong impetus towards women empowerment, youth empowerment, and job creation for the coming future. For corporate India, the key positives that came out were related to about high capital and infra-led outlays. In fact, the government continued to lead the way by upping the capital outlay by as much as 33% to a whooping figure of INR 10 lakhs crore from 7.5 lakh crore last year. This would translate to 3.3% of GDP and is a 3-time jump from the spending in FY20. In addition, the government also updates railway capital outlay to 2.4 lakh crores. Further, an amount of 75,000 crore is the envisaged capex towards 100 critical transport infrastructure projects. Another big announcement was of the INR 79,000 crores outlay towards the affordable housing scheme that is under PM Awas Yojana, an increase of 66%. The continued focus on infrastructure and housing is a key to a continued momentum in the economic activity, as it has a trickle-down effect to multiple sectors and sections in the economy. Now we'll talk about the FPO. India's largest FPO by the Adani Enterprises unexpectedly got cancelled after it got fully subscribed. The company's management commented that given the unprecedented situation and the current market volatility, the company aims to protect the interest of its investing community by returning the proceeds it has received as part of its FPO global market. In the global markets, the US central banks have raised interest rate against as they continue their fight to stabilize the prices. Federal Reserve raised its key rate by 25 bips during the week. Now, even after this hike, the Fed warned that they did not think they have finished raising rates, despite the sign of prices slowing down in the US. Even the European Central Bank raised interest rates by 0.5% on Thursday and explicitly signaled at least one more hike of the same magnitude next month. That's all for this week market wrap up. Thank you all for tuning in and we'll see you next week.